Welcome to Just Minding My Business Media, where you get information that you can use. I'm your host, Ida Crawford. But before we dive in, don't forget to subscribe to Just Minding My Business on YouTube and wherever you get your podcasts. Share us with your family, friends, and colleagues. Engage with us by leaving a review or comment. Your support keeps this podcast going and growing. Be sure to visit our website at jmmbmediallc.com to learn how we can support you in getting more visibility on your products and services. So grab a pen and paper and get ready for information that you can use. I am so happy to bring to the Just Minding My Business media platform Mark Miller, who has spent over 30 years in the tax and financial services industry, helping his clients grow and protect their wealth. He has worked with hundreds of business owners, physicians, executives, and high net worth clients, cutting their taxes significantly. He helps them grow and protect their business and retirement assets in good times and bad. Wow. Welcome, Mark. I
Well,
always,
thank you, Ida. Pleasure to be here today.
yes, I always love the financial folks because we need all the information we can get about protecting our money, and just being smarter with our dollars.
Absolutely, absolutely.
So,
Well, we at Hilton Financial, we're definitely plugged in, especially right now during tax season, because one of the things we do really, really well is help people save a lot of money on their taxes.
yeah, so I definitely need to talk to you because taxes is not my thing. I tried doing my taxes one time and nope, never again.
Like, we totally get it. No one likes to do their taxes, and one of the things, and the main reason why people don't like to do their taxes is why? Because they usually have to pay a lot of money to the
Right.
IRS.
Yes,
So
yes,
it's the last thing on our list to do, and that's kind of what we help our clients combat.
absolutely. So, how did you become a part of the Hilton family?
Well, I've worked with the Hiltons over the years, and the family is about 200 to 250 families that
Mhm.
are heirs and various individuals that have been part of the family over the years. And I'm actually the manager of the Hilton Family Office.
Mhm.
And for those of your listeners that don't know what a family office is, it's just when a bunch of wealthy people get together and they kind of pool their resources and pool all their processes and the connections they have to grow their money more efficiently and better. So I'm the manager of the Hilton Family Office, but we also have a spin-off firm called Hilton Tax and Wealth Advisors, where we kind of bring those more advanced, the wealthiest of the wealthiest strategies down to Main Street. And generally we work with our clients and we start off, and almost everybody we work with we can teach them how to save significantly on their taxes. We put formalized tax plans together with them, for them, and then be able to put that money in their pocket right away, and then do a lot of other things with them to really help them grow their assets more effectively and more efficiently, really get wealthier faster in safer and more efficient ways.
Wow. That is awesome. You saying everything right.
Well, I hope so. Well, it's an interesting thing, and asking how we got hooked up with the Hiltons is I've made the Hiltons a lot of money over the years. They've made me a lot of money over the years, and they asked me to become the manager of the Hilton Family Office. And then it was kind of my thing to say, hey, I've had this concept let's bring these best of the best institutional type of, well, you might say smart money strategies. Let's bring these down, and the ones we can, let's bring them down to folks that, you know, are maybe only have $250,000 portfolios, or $500,000 or $1 million or $2 million, that you don't have to have 20 or $30 million to kind of plug into these type of things. And so far, it's been really kind of a rocket ship ride. It's kind of what I expected. I've been doing this a long, long time, and I knew that this was going to kind of take off. Because people are really thirsty to figure out ways, and obviously the tax thing is huge, but more than that, to be able to figure out ways that they can make more money, make their money grow without so much volatility, without having to, you know, lose 20 and 30 or 40% in a year, which is how the wealthiest of the wealthy invest. So I wrote a book in conjunction with the Hiltons, because the Hiltons are some of the best in the country at tax saving and tax mitigation, called the Tax-Free Business Owner. And I'm about to release a new book called Hilton Wealth, which is going to dive into how the Hiltons have amassed their wealth, not just via hotels, but also amassed their wealth tapping into these more advanced, higher end, the wealthiest of the wealthy money strategies.
Wow. And when does that book, when is the release date for that book?
Well, we're hoping that we'll have that out in the next couple months. But people can get my book right now, the Tax-Free Business Owner, which you don't necessarily 100% have to be a business owner. If you're a high net worth individual or a highly compensated executive or something, we work with those folks too. And they can order, if they go to our website, which is hiltonwealth.com, Hilton Wealth, real simple.com. There'll be a pop-up that comes up and you can order the book, learn about tax savings. But in there, we also talk a little bit about the structure and how we can help folks, again, tap into these advanced strategies that they would normally not even come close to have access to.
Wow, that's amazing. So just give us a snippet of maybe one or two strategies that people can do.
That's a great question. So from a tax saving standpoint, everyone's situation is different, and the Hilton Financial Network has 130 plus different strategies that you won't have access to with a regular CPA or a tax preparer. A lot of those are proprietary strategies, but a lot of them are just deep dive strategies that CPAs don't normally kind of mess with or want to deal with because they're so bogged down in doing tons and tons of tax returns. So we have some bulwark strategies. For instance, there's a strategy called the Augusta strategy, where basically you can, if you're a business owner, you can use your home, kind of rent that out to your business, and then get a whole bunch of tax benefits for doing that. That's a bulwark strategy. Then we also have some fringe benefit strategies that you can use as a business owner that are deep into the codes that, again, normally aren't used. They're in the codes, they pass IRS muster, but a regular CPA or tax preparer is just not going to do those types of things, where you can give yourself fringe benefits and basically be able to take those expenses as expenses in your business. There's another thing too. Everybody knows about the home office deduction, right?
Yeah.
That's a big deal. But most people don't know that there's 3 distinct ways that the IRS says you can take a home office deduction. And inside each one of those 3 distinct ways is a deeper dive to where you can take, usually our clients, when they come to us, we can give them twice, if not 3 times as much in home office savings as they would normally get. And then what we do is we plug folks into some more advanced strategies as part of a whole formalized tax plan. The one thing that I tell everyone when they come to us, our business owners, is most people have some type of business plan. Now, it may not be totally formalized, but they have plans in mind. They
Mm-hmm.
know what's coming up. They know what they need to be doing to work towards that plan, so to speak. But they have no formalized tax plan. And the reality is the biggest expense that any business owner will have in their lifetime is taxes, but they have zero plan for that. Now, it's not necessarily their fault. Part of it is they're with CPAs, and they believe, and most people believe, that their CPA is saving them everything they can be saving on their taxes. The reality is 95 to 98% of CPAs, their model is just to do a whole bunch of tax returns. Maybe they'll get some business returns mixed in there and some auditing. And most CPAs are happy and pleased as punch if they, clear $250,000, $300,000 a year. To them, that is a great business. They'll just do that year after year after year. When you come to them, and I find this all the time, and a lot of your business owners that are listening will kind of know in their gut, and I'll tell you a story how I knew in my gut years ago, that there's got to be more here. There's got to be more than just a little bit of entity planning and throw money in an IRA or 401k or something like that. And they have that feeling, but they don't know where to go to find that out. So they listen to their CPA, and their CPA says, you can't do anything else. And then they'll move on to their next tax return. Okay.
Mm-hmm.
So I learned this years ago when I was, and I've always had a lot of different companies. And in the early 2000s, I had a very successful financial services company, and I was getting $1 million tax bills every year.
Mm-hmm.
And I had the best guy, and I'm from Atlanta, Georgia. And one of my friends had actually recommended me, and he was he had previously been a tax attorney, was now a mergers and acquisition guy.
Mm-hmm.
He said, this is the best CPA you could be with. But every year, this guy just kept telling me there's nothing more we can do. You've already done everything. And every year my tax bill was just going up exponentially. And finally, one call I had with him when I got about $1 million tax bill with this one company, I said to him, again, the same thing. I just don't feel, I would like you to go out and find some other things for me. And then he began to lecture me about how fortunate I was, that I needed to pay my fair share. We've all heard that before.
Yes.
And I didn't appreciate being lectured to. And I basically fired him on the spot, and he was shocked. You're firing the best guy in Atlanta on the spot. How dare you? That type of thing.
Right.
And I went back to my buddy and I said, hey, just so you know, you might be getting a call from your friend, your other friend, that's going to be mad at me. I want you to know that. And he said, well, what's going on? I said, well, and I shared with him what I was paying in tax. And he goes, why didn't you tell me? I would have gotten you with a tax attorney, and we would have helped you cut your taxes. CPAs don't do that. I didn't know that. I mean, I had no clue. And so, and sorry to belabor the story, but basically what happened is I got with this attorney. By the way, he charged $2,000 an hour. We don't even charge close to that. But I kind of grit my, well, he saved me $500,000 in taxes my first year. And then it just grew from there. Then I started providing the service to my clients, and I was blessed to meet the Hiltons, who are considered the best really on the smart money side of the business at tax mitigation. And the rest is history.
Wow. Wow. And a lot of people have this conception about CPAs that they're in great hands. They're going to really do everything they can to help you save on your tax bill. And now listening to you, it is nothing like that. They're no different than H&R Block or any other tax entity.
Yeah, that's primarily who's out there in the CPA field. But there's something about the CPA designation, and they're highly respected, and people trust their CPAs, no doubt about it. But unfortunately, they've created this myth where people think they know everything about money.
Mhm.
They know how to, and most CPAs, all they do is use an advanced version of TurboTax inside their businesses that happen to have like a CRM, client relationship management software attached to it, so they can
Mhm.
easily keep track of all the tax returns they do. And that's really it. So they're historians. All they're doing, you give your stuff to them the first of the year that was already happened the previous year, right? It's
Right.
already done.
Yeah.
And then all they do is plug all your information into that advanced TurboTax, and then you pay them, $1,000 or
Right.
$1,500 or whatever it is. It's all over the place.
Yes.
But frankly, preparation is just a commodity.
Yes.
And there's something about it that makes people think, well, they've got my taxes done, and they were able to answer some of these kind of code questions really quickly. So they are my financial guru. They are like untouchable. The reality is we need CPAs. Don't get me wrong. Okay. We need them to crunch the numbers, help us with compliance. By the way, the IRS calls it compliance for a reason.
Mhm.
And we need that help, right? But it's really important that as business owners and individuals that are highly compensated and everything, we do not want to look at them as they are the tell-all end-all. Okay. You need to have other people and other advisors in your life that understand not just that compliance work and tax planning, but then also understand how all your investments, insurances, all of that are playing into the tax picture also. The vast majority of CPAs have no clue about that. Okay. They know about capital gains and all of that kind of thing, but they don't know how to give you proper advice to like design, say, an income that will throw off completely tax-free income at retirement. And I'm not talking about just municipal bonds or anything. I'm talking about structured strategies to do that, and things of that nature. So we've been about the last several years, and my book is part of this, is educating people about how your CPA, although they're needed, that your CPA is not the person. They're not designed to be tax savers and tax planners. That's not what they're there for. They're there, and their model is generally just to do your basic compliance work.
Wow. Wow, Mark. I am so glad you spelled that out, because I always thought, and I'm sure many people have, that CPAs were the gods of taxes, you know,
Mhm.
and everybody in any type of business entity or mentorship type thing always recommend get yourself a CPA, get yourself a CPA.
Yeah. Yeah. And again, like I said, that's okay. And CPAs can answer some questions. We have CPAs on staff, and we have to work with some of the best CPAs in the entire country with
Mhm.
Hilton Tax and Wealth Advisor. You can imagine the Hiltons have the best,
Yeah,
okay?
right.
But they play a limited role in the tax picture ultimately, if you're looking to save money and have advanced tax planning. Okay.
Mhm.
If you just want to make sure that they put all the numbers right into the systems, and they're spitting out that number that you got to pay in taxes and giving you your estimated taxes, your quarterly estimated, then that's fine if that's all you want. But most of my business owners and most of the folks that we in the Hiltons work with, they want more than that. It's something in their gut. If they're really good at what they do and they really start ratcheting up on those tax bills,
Mhm.
something in their gut says, and I've talked to a lot of people that come to me and they say, hey, I've searched on the internet, I'm looking for strategies, can you help me, all of that type of thing.
Mhm.
uh, and that's the nature of most business owners. They're looking and trying to find those things that are going to make their business as efficient as possible, and taxes is no different.
Absolutely. And that's really important because, you're out there earning, running your business, making money. You want to keep as much of it as possible. Simple as that.
Absolutely. And it is your money.
Yes, it is.
Uh-huh.
And the other piece to that, every time we spend money, we getting taxed.
Yep, yep. Taxes are there's no doubt, and you know, different people have different philosophies. They're like, oh no, we need to pay taxes, and I need to pay my fair share to keep the systems going, all of that. But there's no doubt that the taxes have gotten out of control, and we are
Yes.
overtaxed. Okay,
Yes.
and it doesn't mean we shouldn't pay some tax, but the courts have ruled over and over again, even the Supreme Court, that we only have to pay within the limits of the law and what we're supposed to pay.
Right.
Okay. Often people overpay and they have no clue that they're outside those limits.
Mm-hmm.
And the other thing I tell people too, and this is a little tidbit, that did you know that the tax code is actually designed to help you save taxes, not pay more on taxes?
Wow.
And then it's like, that sounds a little odd. Well, the reason is the tax codes are made by Congress. And every single one of those legislatures, you think they're not looking to save money on their own taxes?
Mm-hmm.
So the reason why the tax code is almost 170,000 pages, and by the way, that's a guess, because even the highest level of tax experts, like that are in the Hilton family, do not know. Nobody knows exactly how many pages the tax code is, which is kind of scary. But it's maybe about 170,000, best guess. Okay. Well, the reason is because over the years, year after year after year, they keep layering strategies. And a lot of those strategies are in there that are designed to help you save, if not completely eliminate your taxes.
Wow.
Hence the tax-free business owners, the name of my book, because ultimately we want to get people to a zero tax bracket as soon as possible. But if you're not going deep into the codes, if you're just doing basic compliance work or preparation work, or just using TurboTax, or just using, you know, the vast majority of CPAs, you're never going to know these things. You're never going to learn them, and you're never going to be able to utilize them in your own tax situation.
Wow. What a wealth of information, Mark. So again, how do people work with you?
Well, very simple. We make it real simple. If you just go to our website, which is hiltonwealth.com, hiltonwealth.com, you can learn a little bit about what we do, how we do it. And I suggest you order my book, which is The Tax-Free Business Owner.
Mm-hmm.
And there'll be a pop-up right there. You can order the book. You can get into our system. You can read the book. The great thing about the book is I've made it short on purpose. It's only like 100 pages because no one wants to read a book anymore, right?
Right.
Uh, and you can also get it digitally, and we've got an audio version, all of that, and we're happy to give that to you complimentary. Learn how more about us, learn how we can do formalized tax planning with you. Generally, we want to work with folks that are paying 20 to 30,000 plus per year in taxes, somewhere in that range, to help you to the maximum degree. But we also, just so you know, we also do a lot of advanced financial work with our clients too. So we're through the Hilton Financial Network. And if you're looking at doing some more advanced types of strategies and plug into, again, the wealthiest of the wealthiest investing strategies, we can kind of get you started on that road too.
Wow. You definitely have to come back because this is so much information to absorb in one
I
set.
could spend 2 or 3 hours with you, I'm
I
sure.
know you could.
Been
And
doing this for a long time, and the Hiltons have been doing it even longer than me. So
yes, so we're gonna have to definitely have a part two, like a little series, because this is a very deep topic, number one,
mhm.
and it's a lot for people to absorb. And
Absolutely. I'd be happy to do it with you. No problem.
so quickly, can you tell us about the next book and how that's gonna help business owners?
So Hilton Wealth is basically we're gonna tell people how the Hiltons have amassed their fortune and beyond just real estate. over
Mm,
the years, because there's several members of the Hilton family that have done a lot of incredibly powerful investing and
mm-hmm.
building businesses that have become extremely wealthy also, not just Conrad Hilton, who started it years ago.
Mm-hmm.
Now, my partner is Brad Hilton, who is Conrad Hilton's grandson. He's my main partner. And then we talk about that history and then how it plays into structured portfolios we do for our clients called the Hilton True Wealth portfolios, where we decrease people's risk massively, but we also keep their returns up and still allow them to get very high returns over time, just like the wealthy, just like the Hiltons have done for years.
Mm-hmm.
The key to investing and investing like the wealthiest of the wealthiest invest is not returns. Okay. And Warren Buffett talks about this, and most people have heard this before when he was asked, hey, what's your number one greatest rule of investing? And he says, rule number one is don't lose money. Well, what's your second rule? Rule number two is look back at rule number one. Okay. Don't lose money. So most investors on the retail side, like if you go look at a mutual fund, look at the 1, 3, 5, 10-year performance,
Mm-hmm.
because they're looking at the returns. How is this return? How is this return? The wealthiest of the wealthiest don't even go there. Okay. First of all, on the smart money side, returns are just going to be there in
Mm-hmm.
the vast majority of things that they do. When they walk into a room or a boardroom to talk to, say, a firm about investing their money or whatever, the first thing they want to see is, what are you going to do to hedge my money, to protect me so I do not lose massive amounts of it?
Mm-hmm.
Okay. And then they go to returns. It's a paradigm shift, because on the retail side, all you hear about on CNBC and Fox Business and everything, what did this return? What is the stock return? What's that? What's the 1, 3, 5-year performance? How is it? You'll see the charts all the time,
Mm-hmm.
and don't talk about risk control and risk management. So that's the first and foremost thing that we've learned from the Hiltons over the years is, first and foremost, let's focus on risk. So really what we're talking about is limiting volatility. And we'll talk about that in the book in detail, about how important low volatility in investing is compared to doing this in the markets, that roller coaster ride.
Yes.
And that if we can eliminate those big losses and then have lower volatility, what that equates into is better and more steady returns over time, where you can sleep at night.
Yes.
But on the retail space, we have not been taught that and not learned that, because it behooves those people on Wall Street because they want to get their fees on the retail side.
Mm-hmm.
It behooves them for people to focus on the greed of returns.
Wow.
And because they do that, then they've put this huge retail mindset in place, that structure in place, that we're going to get you these incredible returns. You just worry about the returns. Sit in things forever, which people just don't do. That just doesn't happen. The vast majority of people don't sit in their investments for 20 and 30 years, especially nowadays with the information revolution. It just
Yes.
doesn't happen. The average retail investor that's buying and selling makes about 2% per year. The average institutional or smart money investor will make anywhere from 10 to 12% per year,
Mm-hmm.
because they're doing it in a much safer, much smarter fashion, and they're not participating in 20, 30, 40, 50% losses in their portfolios.
Wow. This is so great, Mark. I could go on and on with you because you explain everything so well. We're definitely going to have to make this a series, and I will definitely be in touch with you to come back because this is a lot. And
Yes, it is. It is. And our next book that's coming up, my next book is, I think, going to be really enlightening to a lot of retail investors to understand and really know if they have the proper access, okay, which is what kind of Hilton Tax and Wealth Advisors is about. If they have the proper access, then they can build these portfolios that just allow them to sleep much better at night. But we're not sacrificing, like they've been told on the retail side, sacrificing returns. Because again, like I said, on the retail side, Wall Street wants to get their fees from you based on greed, on you thinking, I'm going to make a fortune in this stock or this mutual fund, and look at all the money I'm going to make. Look at all the money I'm going to make. And that's just not, that's why you see, you always hear the term, Ida, the rich get richer. Okay?
Yes.
Because they have access to strategy. The main reason is you'll rarely see people on the Forbes 100 list or even 500 list. You'll rarely see them go backwards, maybe a little bit, but you'll rarely see them just drop off the list because they've made some crazy move and they've lost half of their money. Sometimes that happens, but rarely. Most of them just keep going up and up and up and up. Well, why is that? Because they are the majority of their portfolio is very safe, secure, and then it's not that they're not taking some risk, but they're doing it very wisely. And if something bad does happen, they maybe only lose a little bit, or they stay even in a particular year and they still stay on that list. Okay?
Yes. Wow.
So anyway, I could go on and on all
I
day.
know you could, and I could go listen to you on and on. But thank you so much, Mark. You have dropped many gems this day, and I definitely want you to come back, and we're gonna do like a little mini series, especially when the new book comes out, because we want to definitely elaborate some of the points in the book. But thank you so much. You have really opened my eyes and given me an opportunity to simmer on some things and get rid of some myths that I had. So, and I know you have done that for the audience. So I want to thank you for taking time out of your day to share with us.
And thank you. And folks can go to hiltonwealth.com to learn more about us.
All right. Thank you.